Hey Scott, hey Steve, what's happening?
Hello, hello, happy Monday.
Yes, indeed. Monday all around. It felt like the market was a little sleepy today, but I don't want to get ahead of myself. Real quick here, just want to thank everybody for popping in to hear what we have to say. We know you're busy and appreciate you taking the time to come hear our presentation. Today is April 23rd. April is almost in the books. Time is flying. So before we get into the good stuff, just a quick word from our attorneys. Just want to make sure that everybody in attendance is aware of the fact that we share all of this information with you for educational purposes. And of course, not only this webinar, but any webinar that you would attend here at TI. If you do need investment advice, what to buy, what to sell, all that good stuff, please seek out a registered investment advisor or a licensed broker, someone that is licensed to help you do all that stuff. Okay. So before we get into the curriculum today, just want to make sure for the new people who might be attending for the first time, make you aware of the fact that not only do we have award-winning software, first in its class. That's not really an accurate statement. I'd say that we're kind of the only scanning tool in our class. Not really anybody else out there doing what we do. Maybe some imitators, but that's about it. But not only do we have this fantastic technology, we've created a very vibrant community around the technology, which is crucial. It all kind of starts at the very top here where you can see the trader's room. Now, one of the best things about the trading room, other than Barry, who's the moderator, is the price, which is $0, right? And you don't even have to be a member or a subscriber of Trade Ideas currently to get in there and use the trading room. 500 people, 600 people is where it's peaking. Probably have a lot more than that in our recent test drive. But just keep in mind, to get access to a trading room of that caliber, you're not going to find it free anywhere. Maybe off in some far corner there's a free one, but when it comes to one of this size and the skill level that resides within it, not only with Barry, but the other traders in there, you typically have to pay for it, and they're typically not cheap. So if you haven't been using that resource, by all means, get in there and check it out. Of course, today is Monday. It's myself and Steve. Trade of the week is tomorrow on Tuesdays, where Steve takes the helm, takes a little bit different of an approach, and touts his trade of the week, goes over more technical stuff. And of course, Andy rides shotgun with him. Q&A demos on Wednesday. We like to change it up a little bit, and by that I mean we bring in Dan, our CEO, and our Chief Technical Officer, Brad Williams, always entertaining there. And then Andy on the 1-hour webinars wraps it up on Thursdays with the Trading Studio, and I ride shotgun with him. Of course, Friday support, a little bit different. 3 hours long, come one, come all, anything Trade Ideas related. We're there for you all day Friday. Can't say all day, 11 a.m. to 2 p.m. Eastern. Sometimes it feels like all day. But what you can't see on this list, probably need to add this for future webinars, is the new webinars that we've started hosting, what we refer to as TI University. So those little guys are Monday through Thursday, starting at, let's see, 9 a.m. my time, so that's 12 o'clock Eastern. Those go for about 1.5 hours, ranging from Monday to the basic stuff, increasing with the difficulty level Tuesday, Wednesday, Thursday, and Thursday we get to the advanced stuff. So great places to learn and continue to educate yourself. Very valuable if you're a brand new user, since we've been phasing out the one-on-one training sessions and replacing it with TI University. So all in all, 9 webinars per week. That's a pretty big load, so hop in there, take advantage of the resources, and it will definitely do you some good. All right, so wanted to take a moment here to let you guys know that we put out an ebook not too long ago. Myself, Andy, Steve, and Sean all contributed to this book about what to do when buy the dip kind of stops working. Now, of course, we've gotten a little taste of that here lately, and I just wanted to show everybody this is this is the day actually where we released the ebook. And of course, there's a little bit of luck involved here. Can't say that we knew that the market was going to come on down here and have a little correction, but not so bad timing on the release of that ebook. The nice thing about it, once again, it's free. So if you don't have it, go ahead and download it. Don't have the link up here. We can provide it for you in the chat link here in a moment to make sure you know where to get that thing. But if you haven't done it, get it, give it a read. Could do you some good when short selling starts to dominate the markets. All right, so on to today, and circling back around to the comment that I made earlier, kind of a slow day in the trenches as far as spotting good trades today. Not to say that there weren't any, because there always are, but today was one of those days where they were a little bit harder to find, and we'll get into that here in just a second. So Steve, I guess it's that time where I'm going to pass the baton to you. We can let you start off with the market recap.
Sure. Go right ahead. And yeah, Bill, and anybody else that's interested, when Jamie was speaking about Trade Ideas University, we have recorded a session in the past a few weeks ago. So, you know, if you find your way to our Trade Ideas YouTube channel, under the playlist section, you'll see one called TI University. And that'll be the place in which you can go back and get a rehash of basically all the content that we normally do on a given week. All right, so with that out of the way and said, let's take a look here at what the market's doing. I always like to start with the S&P 500 or the SPY in this particular case as a proxy. A couple of interesting things. I had mentioned last week that, you know, what this market needed, or what the bulls actually needed, was a close above this 50-period moving average for a few days and hold and build a base camp there. And I wonder if I can tick back. Probably not. Let me see if I can fool the system. There we go. Fool the system just a little bit. You know, 2 days ago, last Thursday, this candle kind of had a chance here. You know, we pulled back, we filled the gap. We had a nice buying bottoming tail at the end of the day. The buyer stepped in and we closed 3 days in a row on the 50-period moving average, and kind of thought, well, this is what the bulls are going to need to build a base camp and keep moving higher. But then, of course, we go to Thursday and Friday, and there's been a lot more slop and continued backing and filling in not a very orderly fashion. One of the things of significance is this middle orange line here. So for that line to make sense, I want to bring you back to the 15-minute time frame. And I drew this a lot last week. If I get it out just enough, you can kind of see here the beginnings of kind of a saucer bottom here, or a head and shoulders bottom with a double shoulder, but nonetheless a deep dive down here that was the deepest. And then, you know, if I could draw a circle, I would draw kind of a rounding bottom here. But the tip of that rounding bottom really didn't show itself to be out of the woods until it closed above this orange line for the most part. And we did that for a few days, as I just showed you on the daily candles. But look at this. There's our 3 days, and now we're back down into no man's land here. So very slushy, not a lot to go on, not a lot for really the bulls to stick a flag in the ground and say, you know, we've got a higher base camp here, because the last 2 days, Friday and today, have just been continued softness dripping back down into that range. A couple other ideas here of note on the SPY. It's very obvious to look here and see the bifurcation of last year's buy the dip market in the fourth quarter. Small, narrow candles, not a lot of volatility, and then ebook was released right here, like Jamie said, and then the roller coaster started to bounce, plucking the guitar string and letting it kind of vacillate back and forth and creating its range. Well, the range it's creating, you know, seems to be, for the most part, this orange line down here, which in fact was the line for the last 2 weeks that would have triggered, you know, a further shot to the downside. And using XPXU, for those that were interested in an inverted ETF, to participate if the market did get weak and take out this base. But we didn't. We bounced back up, but then the last 2 days we're right back into the range again here. So all we can really confer at this point is draw kind of a declining trend line there from those highs. And we can see that we're still kind of smack in the middle of a possible range-bound market. And this could go on for another few weeks, guys. Again, this being the downside, and this declining trend line kind of keeping a lid on things. And then right in the middle of it all is this pivot line, which, by the way, corresponds back here to 2017, very strong level of resistance. So a lot of times resistance and support will show back up again in future and past and create those pivot lines we talk about. In the Qs, we have a little different thing happening in my view. We're back below the 50-day moving average after 3 days above, so that's not good. So we're back to kind of a neutral no man's land stance here. And, hindsight is always perfect, but we never really know until the data points are in. But this could be the beginnings, kind of a head and shoulders top here, guys, in the Qs. I mean, I'm trying not to talk myself into getting bearish. I'm trying to remain neutral because that's what the price action is telling us. But these topping patterns with that declining trend line creating a wedge in the spiders is of note. And then in the Qs, I think this right-handed shoulder here is starting to appear with the failure that we could not build on last week above the 50-day. So that's a little interesting note going on in the NASDAQ, possible head and shoulders. And then in the Dow, well, we're just flat out being driven down by the near-term downward trend line. It's touching 1, 2, 3, 4 spots here, and notice we had kind of a false breakout where we thought we had some closes above those 50-day moving averages, but again, the tide going out is kind of taking all the boats with it, and we've got 2 real sloppy days of kind of coming back. But interestingly enough, we didn't close below that declining trend line here in the Dow. So that's kind of interesting. We broke above it, and the resistance of the Dow trend line here has now kind of become support in the last 2 days. My trend line moved around. There we go. So the last 2 days have kind of held up there in the Dow. And lastly, IWM is kind of holding up better than everything else. I mean, it's still above its 50. Put in a nice little tail here today, kind of holding at this pivot level that I've been drawing and holding on. So for the moment, the small caps kind of look the best because they're higher up off of their bounce, higher above their moving averages. So again, most notable is we were unable to hold that pivot level, which was also right at the 50-day moving average. We had 3 days of possibility, and then we kind of gave that possibility away in the last 2 days. So we're right smack back here in no man's land, guys. And again, the Q's looking a little bit head and shoulder-ish, unless in the next couple of days we really dig in here and make an assault back on these highs right here to basically squash what could be the beginning formations here of possible head and shoulders. I know we had earnings today in Google after market, and it was kind of wacky. Let's just take a look at aftermarket, show post-market Google. And you can see it traded all the way up to here in its initial euphoria. And then as the numbers are being basically evaluated, kind of no harm, no foul going on here on Google. So I don't anticipate Google lifting the NASDAQ much at all tomorrow based on the current earnings it's going through. We got Facebook this week, and I think Amazon this week too. So a lot of tech earnings this week, which really could give us a possible direction as to what's going to happen in this NASDAQ QQQ. Is this going to be a head and shoulders top, or are we going to go back and reassault this possible right-handed shoulder? And that's all I got. That's it. Back to you, Jamie, unless you got something you want to add.
No, thank you very much. That's one big wick on that Google post market.
Yeah. Sometimes, Frank, when small cap stocks are doing best, in my experience, that's usually the 9th inning of moves. They say the junk stocks can be the last to go. There could always be a day where you have a couple of really nice moves in sub $5 stocks. But in my experience, that can be a 9th inning type of an event. All right, back to you, Mr. Jamie.
Perfect. I assume you can see, right?
I can see.
Perfect. Okay, moving right along here. As Steve was pointing out, kind of range bound there, waiting to see what happens. Relative volume levels on all the tracking ETFs well below normal. And that's kind of how the day played out too. So when we start to take a look at Holly here, and by the way, before we move on to see the Holly trades today, just want to give everybody an updated peek at the performance chart. And of course, this is risk off, Holly's most conservative mode. And for those of you, for those of you in attendance, I'm sure some of you probably came to us through our open house or our test drive, which was last week, all last week. So Holly really put on a show, if you were observing. lit it up pretty good the 16th through the 20th, which was last week. As you can see, all the green here. And of course, I wanted to show you the chart for risk off. Of course, the chart's going to look a little bit better for risk on, but always like to show the most conservative method here when we're showing you the performance chart. So Holly continues to outperform, and as we continue to make enhancements to her, hopefully that will increase and happen at a faster rate.
Casino odds right there on that chart.
Hey, those casino odds. So no big surprise to that today. She kind of took a little break, right? So let's take a peek here. Number one came with a pretty stacked deck today. 10 strategies, which isn't the highest amount. The higher amount that she comes in with, sometimes it can be 13, 14 strategies in there. Today, just 10. And on the low side, she can show up with 4. So not the biggest and not the smallest, just kind of right in the middle there as far as strategy count goes. And we had 10 strategies with 7 of those being longs, and of course these 3 guys being short. Looks like bullish pullback, putting on the brakes were the only 2 that did not have a signal. Now, having said that, boy, she sure wasn't shy about putting on trades or trying things out today. We had 18 trades, and you can see that most of those trades were longs. We did have a couple of shorts. One of the shorts didn't do too bad, and then one was a small loser, so kind of a washout or up slightly on the shorts. The rest of the action was pretty much long. Now, the interesting thing today, not the only interesting thing, well, but one of them is the time that Holly put on her first trade. So we can see here, of course, I'm on Pacific Standard Time, so 6:30 open. We can see it was just about 30 minutes before the first signal popped out here. And a lot of the times we'll get a lot of trades after the first one in consecutive order and establish some type of bias. You know, we had one here at 6:59, and then the next one took about 8 minutes, then about another, I don't know, 18 minutes here, 16, 17 minutes. So they were pretty gappy today. So that's a little bit different action than we're used to seeing, especially when we compare last week. But the bias was still long, even though we didn't see the trades pile in with the frequency that we typically do. And that is really basically indicative of the market and the fact that Holly did spot quite a few trades today, but it's the overall results and where the risk off and risk on ebbed and flowed. And we can see here by looking at the equity curve here for the intraday basket of stocks that she was in, as she added, you know, we did get up to a respectable $1.24 on risk off, slightly higher, not quite $1.57 on the cumulative basket. And then if you didn't take those cookies, the chance was gone. You know, you had one little bounce off the bottom here, but if you didn't take it on this first pop or take it here, then it's pretty much underwater the rest of the day. Risk on, finishing the day down 54 cents. Now, for a losing day on risk on, that's not that bad, but we did finish positive on risk off, which of course is Holly, you know, just obeying her rule set like me, you, or any other trader in the right mind would do, getting out when you're supposed to with stop losses, profit targets, timed holds, things of that nature. So typically, especially last week, we've had lots of opportunity to showcase how you interact with Holly going risk off and risk on. And of course, right now I'm sorting by risk on, but we just don't see, we see these 2 guys right here showing higher risk on values than risk off. So we'll talk about those, but you know, typically I've been showing some good examples of risk on and they work, but today's a good example of going risk on and it not working on the second lot, which is good because this happens, right? But the good news is you just didn't make as much as you hoped, but you still made something, right? So let's take a look at RETA. Now, not a bad entry signal right here, right? Blue line corresponding with Holly's entry price. We got a stop loss here. And on this strategy, I don't believe there was a profit target, but that's a good way to point that out. Float on. Came into the day at 59.7%. It does have a $2 profit target. I'm just guessing I can't squish my chart up big enough to, or small enough for it to pop in over here. We see it on the daily, but for some reason I can't get it to snap in here. But anytime that happens, you can always reference the daily chart. In any case, Holly, you know, we can see the stock finished pretty good, right? But look at the in between, right? And this pattern right here is repeated throughout many stocks today. So it wasn't just RETA that was doing this. It was the majority of stocks today, taking these severe pullbacks through the crucial levels. So typically, this would be a great risk-on trade because it finished higher. But if we're playing along with Holly and doing the 50-50 method, which I always recommend, especially when you're trying to get used to this method, is to, you know, peel out of half of your position with Holly on risk off. And then if the chart tells us so and we feel comfortable with it, then we can go ahead and hold that second lot for hopefully a higher push. So today we get out with Holly and take our 11 cents on the first lot, and then we set our break-even stop loss here for the second lot. And of course, what happens? Folds over, stop out. Now, last week they all pretty much kept going, but today was lazy. Just wasn't the market of last week, and if we tried to take more risk on that second lot, we did not get rewarded. But the good news is you still made something on the first lot, you zeroed out or lost a few pennies on the second lot, no harm, no foul. Now, it's kind of torturous seeing risk on at 86 cents at the end of the day when we get stopped out. So, you know, just additional input here. If we see a stop out, or if we get stopped out, we can always come up here and draw another line and go, okay, sometimes this just happens. There's not enough volume to carry it up. The algo hunters came out, maybe it's the stop hunters. It doesn't really matter why we got stopped out. Bottom line is we did get stopped out. But just keep in mind, once you see some tops put in that are nice and uniform like this, wouldn't have been a bad idea once we see this area get penetrated here. Now keep in mind, it never comes down to the original stop, which is good. So that's another scenario that I failed to gloss over here, is that maybe you buy and you hold, you know. Now, if you bought and held this one, you got paid because it never hit the stop. But that's kind of the more difficult way, or I guess just guessing, for lack of a better description. So I'm still a big advocate of the half risk off, half risk on, because it's more uniform and you can expect the same thing all the time. You know, what you don't want to get into and beat yourself up mentally is you're in the money and then it comes all the way back down and gets stopped out and you made nothing, right? That's the pitfall of just going, well, I'm just going to stick in here and obey the stop loss, right? So different methods, different risk associated with those methods. The half, 50-50, do half with risk off, risk on, that just seems like a more practical way to me to go about interacting with these trades. All right, just checking out the questions panel because I did see some pile in here. Let's see. Okay, so hopefully, Ken, hopefully that gave you a little insight, but I'll cover some more when we look at these next few trades here. And Fernando, good. Stayed in.
Risk on.
Yeah, and of course, you know, we could always look to the daily and see what might be going on here to help us give a little, you know, help us have a little bit more information as to what's going on. Nice healthy close above this area right here. So might be a good stock to keep an eye on for tomorrow. If the buying comes back into it, who knows, we might take a little trip up to here or back to here, or, you know, maybe go back further. But never a bad idea to consult yield daily. All right, so let's look at the next one here. This one looks really good at first glance. Holly bailed for a flat using her profit save functionality, but now it's up 53 cents, right? And of course, this chart being kind of like the story of the day, lots of ebb and flow around these levels, barely penetrating the stop loss. So here we have Holly getting in. By the time she gets out, she's flat right here. Of course, the dark area is the shaded risk off area, the time that Holly spent in. When we see the lighter gradient, that's risk on time. Now, you know, this is just the way of things today. We get in, Holly pulls the trigger, bails a little bit early for a flat, and then of course, that stop loss would have been triggered. And of course, what does it do? It goes right back up, tickles the entry line again, comes back down, tickles the stop loss again. So just ebb and flow in this little channel here, finally getting a little bit stronger at the end of the day. But, you know, unless you were just going to play, okay, I'm going to try to buy it when it gets down here and sell it when it gets up here, you would have only had one chance to do that. You know, it's not like it sit here and went back and forth, you know, numerous times, because we're looking at 15-minute candles here. But let's just stretch it out a little bit. You know, I mean, it is what it is. And this is indicative of the day too. So whether you were an AI, whether you are a human or whether we're watching an AI, you know, with the volume levels being what they were today, it was just kind of a tough day no matter how you slice or dice it. So Ken, with risk off and risk on, I don't know if you typed that question before I started talking about RETA or not, but just give me a yes or no. Yes meaning I need to explain risk off, risk on a little bit more. Or, okay, all right, so let's look at this one again. Now, Ken, right here, what you need to focus on is the shaded area. This is the time that Holly was in risk off, and we can always consult the risk off column to see why she got out of the position. Of course, we can always look over here at the entry time and the exit time as well. So she was in this trade just probably slightly less than 26 minutes, all right? And since these are 15 bars, this is that time period right here. So a lot of the times we'll see Holly getting out of a trade, and you know, we'll see the reason here. But a lot of the times, especially on a day where we got a lot of upside momentum, volume levels are strong, we will acknowledge the fact that Holly's getting out of the trade, but based on the chart pattern, if it's conducive, we'll think to ourselves, since we're a lot better at reading charts than Holly is, well, this looks good. I think it's got more in it. I'm going to stay in it. So when you stay in a Holly generated trade after she's getting out of it on risk off, if you think that there's more money in it and you choose to accept more risk and stay in that trade, that's what we call going risk on. So when you're new, good idea is to do both. You peel out a half with Holly, you book that profit, you keep the other half. So if you're in 200, you peeled out a half with Holly, you made 11 cents. You took the risk on the second lot, you readjusted your stop to break even, which is the blue line or the entry line. Now in this case, it did not work. Now it did end up moving higher, but as we all know, it's all about the timing, right? So it would have come down here, and if we would have used a break-even stop loss, we would have gotten stopped out. But many times, as in last week, these things just kept on going. So the goal typically is to try to pull some of this spread between 11 cents and 86 cents. You know, 75 cents up for grabs there, assuming it works and assuming you don't get stopped out. Today was an example where we have few examples, number one, of things that are showing higher risk on values versus risk off. But this one is a good example of one that failed. Now, on the good side of that coin is the fact that you still made something on the first lot. On your second lot, you got stopped out for zero or a very small loser. Okay, so Ken says he gets it. Very good. And so that's really about it for Holly today. We can see here, these were the two that we showcased. 39 cents here, a little bit poorer of a tally by the end. Actually, let's take a look at Hertz. Not a bad one, but look, these wicks would have stopped us out again, or this one would have, because Holly makes the entry here. Things work. Why did she get out? Timed exit. Different exit reason than these two up here. So timed exit, buyers stepping in was the strategy. We see right here the timed exit. This strategy was designed around a 60-minute hold time. So profit target or stop loss did not get hit during the time that she was in Hertz, and the hour expired and she gets out right here. Now, if we would have done the same thing, okay, I'm going to peel out of 100 with Holly, take my money, and then I'm going to give the other one a stop loss back down to break even. Boom. Once again, barely. I mean, it's uncanny how much they go below, but a stop out is a stop out nonetheless. So almost stayed in this one, but once again was stopped out on the second lot, and that just seems to be the theme of the day. The pullbacks were pretty severe today. Probably a function just of the low volume, and the algos being more in control today and less institutional buying and selling. And of course, we looked at the winners. Hey, it's only fair that we should take a peek at the losers today and see how she handled those. Now on Caveman, CAVM today obviously did not work, and her stop out saved her money, right? As opposed to staying in it all day. So took a 27-cent hit, stayed in that one, would have been a 41-cent hit. And of course, RMD made money on, risk off. But if you tried to hold this one, wouldn't work either, right? So we're not just seeing this today from one stock, we're seeing it from the majority of stocks. And not only the Holly plays, but many, many, many other stocks, or the majority of stocks, were giving us this business today too. Top to the top, back down here to the zero lines, or some of them even through the stops. So that's pretty much it for Holly today. Lots of activity, but little pizzazz. And then, taking into consideration the nice run that she went on today, when we have the low volume, not a big surprise that she's taking a little breather. So we'll see what happens tomorrow. All right, let me consult my cheat sheet here and see where we are. Experimental CC windows. All right, so I spent last night putting together some new CC windows. Boy, and I was all amped up to see what the readings would look like today. But Jamie, even though he has thousands and thousands of hours seat time with trade ideas, probably got a little bit too bleary-eyed last night. And what he did is he saved his compare count windows to the wrong layout, only to realize it about 3 minutes into the open today. So for those of you who look at my compare count readings, that's why there was no tweet of them today, because I lost the first 3 minutes of data. But it wasn't all for naught, because I did manage to create a couple of new windows here. So before we're done here, I'm going to drop the links in for these 3 compare count windows that you see across the top here. Now this little guy, I've kind of just went to him for my overall read on the markets. This is the one that is configured for stocks or companies with a market cap in excess of $4 billion, right? Just tells us what the big boys are up to in the big caps. So this is the same one that's always been there. Now these guys are a little bit different. Now these are experimental. We don't know what they're going to do. I'd hoped to have my first day of data under the belt today, but due to my little error, that did not happen. But they'll be firing actively tomorrow. So there might be something interesting here. Then again, there might not be. That's what we have to do all the time. Hey, this sounds interesting. Let's put a window together to see what comes through, and it might yield some interesting correlations, and it might not. So these are the 2 new ones right here, and I've made gap down reversals versus gap up reversals. So if we take a peek here in the green data side, we'll take a look at the filter set here. So I've got my general parameters in here, just capped it with 150 to keep all the huge things out, like Berkshire Hathaway. Really screws up a VAC test when you forget to do that. But anyway, just capping it here at $1.50, nothing on the minimum. Using the earnings filter to get rid of the ETFs and iShares. Average daily volume on the 10-day, 350, had to be a gap down of 1% or greater, right? And then of course the alert is a gap down reversal. Of course, on the opposite side, got the same filter set, gap down, gap up of 1% or higher, with a gap up reversal. Okay, so there you have it. Things that are gapping down, closing the gap. things that are gapping up, closing the gap. What will we see? Unknown. But it'll be interesting moving forward the rest of this week to see if there are any interesting correlations in the overall ebb and flow of the market based on what we see coming through these windows. Now, in addition to that one, so if these are gap fills, then it should only be fair that we should look at Balt's gap up retracements and Balt's gap down retracements. Now, I quickly notice that my fingers got ahead of my head right here. So Dwan, let's go in there and change that guy. Program loading, please waiting. There we go. All right, so let's just correct our typo here. Okay, in this one, you're going to see the basic skeleton key filter set here. We've got a minimum gap down of 1% or higher, and then the alert is a false gap down retracement, right? So it's going to try to fill that gap, and then it's going to roll back over. And then, of course, on the other side, minimum gap up of 1% or higher, false gap up retracement. So, Steve, I think I got all those configured properly. Can get a little confusing.
Okay.
You know, but we'll see what happens tomorrow with these guys, how active they are, if the bias that they're using or showing us is, you know, showing us any interesting correlations. But just wanted to throw these guys out there and let me now. What I've done is I've got all the cloud links right here. So I'm going to drop those into the chat. And I didn't label these individually. So you'll see the 3 links. So just load those guys up. Oops, hopefully those didn't get all jumbled together. Let me see here. All right, it should be clickable on those guys. So if you just click on each one, it'll take you to the page. What I mean by that, I'll give an example. When I click on one of those links, it takes me to this page. All we really have to do is grab this guy up top here, make sure he's highlighted, copy it, and then paste it. File load from cloud, like so. System's going to auto paste it for you down here, and then when you hit the button, it'll pop right up for you. So I dropped all 3 of those in there. Tomorrow we'll all be on an adventure together watching the new ones, and hopefully good old faithful will show us something interesting as well for the overall market direction. Bill, so false gap retracement, it looked like it was going to, but then it folds back over, what Steve might refer to as the horseshoe event. Mm-hmm.
Yeah, and in that event, maybe you take a second, Jamie, go to config and find it. Just
Sure.
To add to that, there's a qualifier window in there, just quality window. And with that quality window on the false gap up retracement, if you just do gap, you'll find it.
Here we go.
Yeah. Okay, so select that window and notice there's a quality window. What does that mean? Well, it means how much of the gap needs to be filled, and I usually use 30%. So if stock gap's up $1, you know, it's going to need to probably come back 30 cents or so before that filter is satisfied. If it just pulls back a few ticks and then rips to new highs, that's more of a gap and go in my book. I'm looking for a gap, pull back, consolidate, marinate, think about it, who's going to win. Hopefully the bulls win on the gap up, and then as it goes to new highs, that should take some shorts screaming and kicking along the way and bring in momentum players as well. So that's kind of the thinking and the methodology behind it. And that alert is about 15 years old, one of the first alerts that we had in our library.
Right. And I think I might have shown the wrong one there. Let's, no, that's right.
Yep, that's the one. You just put a percentile in the box.
Right here, I just put the wrong.
Yeah, you did the wrong one. So in the gap fill, yeah, it would gap up and then it would pull back 30%. And then if it did 30% or more, that qualifying filter will be satisfied.
Right, and I left these blank, so keep that in mind, ladies and gentlemen. You might want to make duplicates, so you might have 2 versions. Leave one blank, pop Steve's recommendation in there of 30 cents in the other ones. Notice the change, notice the difference in the windows. And we'll take it from there. So it'll be interesting to see. And keep in mind, this might show us nothing interesting, but then again, it might. And that's just the name of the game here, because it doesn't matter how long you've been using this software, 10 years, 15, what are we coming up on now, 15 years? The whole duration, 10 years, 5 years, a day, a week, whatever. We always need to push ourselves to create new things to see what's out there. And it's real easy to get stuck in our rut, and it's fine being stuck in our rut as long as everything is working while we're in the rut. But it's always a good idea to constantly be pushing yourself to see new things, because it's exploratory, right? You never know what you're going to find, and you might find something good, but unless you go on the expedition, another story. Okay, let us check. Right, Lyle, and I see your question there. So good idea just to duplicate the windows once you load the cloud links. Just give it one of these guys. Right click, duplicate. It'll make a clone for you. And all you have to do is pop in there and put those values in there. Of course, this is a different window. It's not the gap, but hopefully you get my point there. All right, so let's check the clock here. Looks like we're doing okay on time. So those are the experimental CC windows. And of course, there are a couple of things that I was able to pull from my pack losers window today, which has been pretty quiet. But I just went and looked over all of the stocks that were showing up here at the close, and the things I'm about to point out to you only apply to people out there who don't mind doing a little short selling. Some interesting things, charts here. I guess the first one, well, we could look at IDT was a good one. All right, so here we are looking at a daily, and of course these would all be predicated tomorrow whether or not you make the trade as to whether or not you see a nice cuddly intraday setup with low risk. But if you can find that, look what's happening here on IDT. Now, not a huge volume push today. The thing finished trading relative volume of 1, but it did take a little excursion outside of that into the abyss, because this thing is at all-time lows. So not a bad one to keep an eye on as a good short sell tomorrow. If you see a nice opportunity on the intraday, risk is low, volume is decent, that could very well end up being a good short sell. It is a lower dollar stock, so you might have some difficulty on a borrow. But let's see here. There are a couple of other ones doing the same thing. Once again, a lower price stock, but the pattern is the same. These guys are technically in a little bit of trouble. Now they're wicking back above here, but that doesn't mean tomorrow that there might not be more action below this line. And once again, if you can get a good read on the intraday and a good risk, then not bad to keep an eye on moving forward. There's no harm, no foul. And if you do get a good trade out of it, even better. IDT, once again, same type of pattern here. MNK, more of the same. So far we've had VER, IDT, MNK, and I believe the last one here, RevG. Now this one broke down from this little area here. Only took, what, a 3-day breather, and is now knocking on the door of the abyss again. So just 4 symbols that you might want to keep an eye on. Might not be a bad idea to throw them into your price alerts, which is really easy. So, let me give an example of how to do that. If the low of this candle today was 1805, then I'll just set one for 1804. Or I could even go, if I really wanted it to be getting through that $18 whole number, I could even use a price of $17.99. Make sure we're looking at the right direction, and just load all those guys up tonight. That way, if they make that excursion, you'll get the alert, size it up on the intraday. Maybe it's a good short, maybe not, but we will see what tomorrow yields. And I do believe we're going to have a few extra minutes here, Steve.
Okay.
So I guess we can take a couple of charts. If anybody out there has a chart that they would like us to take a look at, let us have it. My questions panel tried to leave me, but I was able to find it.
Nobody yet. Okay.
Yeah, Don, I'll drop that pack losers in there, no problem.
All right, there's 4. That's probably going to be it. We'll go.
Right.
We got Micron, ENPH, NOW, and WTI.
All right. First up, Micron.
Well, a lower high on the daily chart and a pretty hot red candle today. Didn't see any buying at the close. And correct, Don short. So therefore, you're looking pretty good. Now, I think your downside bogey is that red dotted line that says swing exit, which could very well be a target for you. Look, I feel like it's probably wanting to head there. So if you're hooked up on that short, it's looking like it wants to go test that level. Maybe you sell half, maybe you sell it all. It's your call, of course.
Perfect. Okay, pack losers is now in the chat area. So anybody that wants that top list, have at it. All right.
Okay, Chris, ENPH long threw in kind of a little exhaustion wick for me today. You see those 3 or 4 days of good greenness, and then we kind of got to those levels where we were before, and kind of a sell-off topping tail wick. I kind of feel like there's a couple days of pullback getting ready for this one, but it's not to say it couldn't settle back in and maybe try and put in like a cup and handle and make another assault on highs. But looking at this, you know, it's had 4.5 good solid days, and it looks a little exhausted today to me. That's all.
All right, next on the block, Hey Now.
Hey Now. A couple of days of pullback. Can you look at now? So I don't know if you're thinking long or short. I mean, it bounced right off of a flat 20-day moving average today. I would use the low of today, 166.62, to see if it can build on that. If it bleeds back down through that, then I probably wouldn't fight it. But tomorrow, if it wants to hold that level, it's got a shot. It's had 4 days of pullback and resting at a level that makes sense. All right, we can do one more. Was WTI.
WTI?
WTI.
There we go.
Which is the offshore driller. So WTI had a nice move, and then 2 days of pullback, and then today started to get in gear again. And look at the intraday chart. You see the intraday chart, how it closed there on that 10-period moving average? It closed really nicely. That intraday 10-period SMA held the price going into the close. It's very, very healthy on the daily chart. The moving averages are all fanned out, spread out. I mean, if anything, you know, today's action brought the price a bit way above the most nearest moving average again. But it's a healthy looking chart. It's probably going to have a lot to do with, you know, energy sector and what's going on with oil. If you put on USO, it's kind of mirroring what USO did today. So WTI has got kind of a very similar chart to USO, with today having a nice green candle coming out of that consolidation. So that particular sector's been heating up and showing signs of life. Unfortunately, at the pump for the rest of us, that's going to show up in energy prices, but can't deny what's happening over there in that sector.
Oh yeah, $4 gas will be here in Cali pretty soon, with the new taxes and all. So
ridiculous taxes, yeah, to pay for things that should have been paid for in the first rounds.
Yeah. I guess I'll have to expedite the purchase of my Tesla, huh?
That doesn't matter. They're going to start taxing you by the mile. So enjoy.
Yeah. Well, fortunately, I was just kidding. I'm not buying a Tesla. I'm sticking with my same old
Unfortunately,
car.
I'm not kidding. They're going to hit you by the mile.
I'm sticking to my same old car that I never drive. So, oh well. All right. So, Frank, your question about the pack losers, is it better on live market hours or live always? Probably doesn't really matter. I typically leave mine on live always, but you're probably not going to see that big of a difference. All right, so Bill tells me that the link to pack losers isn't working. Let me try and drop that in one more time, Bill. Okay, so here it comes one more time. Oops, wrong window. Okay. All right, I dropped that link in one more time, maybe.
You going in the chat window? Where are you going?
Yeah, it's in the chat window, which is where I dropped it the first time. That time I accidentally dropped it in the questions panel, but this time it's in the chat window. So let us know if that works.
It worked for them. It looks like they loaded for them.
Okay, perfect. Okay. So hopefully, I was like, oh, I hope that thing that we saw in our handouts panel is not rearing its head straight from the collab field now.
No.
But I think that's a completely separate issue. Okay, looks like we're about at the end of the show, ladies and gentlemen. Once again, thanks for popping in. Scott, if you are ready to tell them how they can save a little bit of money if they're new users, I think we're ready for you.
Yeah, thank you. Sounds great. A couple items on the way out. Let's make sure everyone's got basically just like magic, listen to podcasts, whatever application, and just add it as a subscription. Download the past issues and get up to date. Then moving on, we have a spring code, spring swing, all caps like you see it on your screen, or you can download the handout attached to your GoToWebinar interface. Just expand the handouts panel and click on the blue PDF download link. And use Spring Swing this month to save 15% off your first month or year of trade ideas. Any questions, email us, info@trade-ideas.com, and we'll have the recording of this up later on tonight or tomorrow. You can also follow Jamie Hodge at QuantBot on Twitter, follow Steve Gomez at Today Trader on Twitter, Dan Merkins at Trade Ideas 1, and follow us on Facebook or like our page, facebook.com/TradeIdeasPro, so you can share everything we post with all your friends. Thank you, Jamie. Thank you, Steve.
All right. See you tomorrow.
Thanks, everybody. See you tomorrow, guys. Bye-bye.